The Senate, they didn't do the vote like they said they were going to two Fridays ago, but they did release text of their version of the big beautiful bill. So the House already passed their version. The Senate is deliberating and will probably pass some version on their side. And then because the two are different, they'll have to reconcile the two and then send it off to the president for signature. Now, originally they were talking about getting it done in April, then they missed that deadline. Then they said Memorial Day, then they missed that deadline. And since Memorial Day, they've been saying they want a July 4th ceremony, signing ceremony. And we are 2 weeks away from that. So maybe that'll get done. In differences between the Senate version and the House version. A couple things. So one is the QBI deduction. So the QBI deduction was created back in 2017 with the original Tax Cut and Jobs Act, and this is a tax break on pass-through income from various types of pass-through business entities. It's a great deduction for small business people, and the House version had made it permanent and raised it to 23% potentially, and the House Senate version makes it permanent but keeps it at 20%. So that's something that will need to reconcile that 20 versus 23%. People have heard about the no tax on tips, no tax on overtime thing. In the House version, there was no limits on that. In the Senate version, there's a limit of 25,000. It also depends on if you are under a certain income threshold overall. The senior no tax on Social Security, not in either version. The House version had a $4,000 extra deduction for seniors. Senate version had a similar kind of thing. I think the number differed a little bit. Tax credits for kids, child tax credit. They both versions expand the child tax credit, but there are differences in numbers as far as how much they're expanding and how many years they're expanding it for. The MAGA accounts are in both versions, and I didn't see any substantial differences between the two on the MAGA accounts. So this is where for newborns or people under 8, you can open this account, which is a trust account of some sort that's going to be invested basically, from what we can tell, in index funds of the stock market, of American stock markets. If you open it for a newborn who is born after the passage of this thing, the government will kick in the first $1,000. But anybody can open an account for, assuming this passes, can open an account for anybody under 8, and they can contribute up to $5,000 a year. You can open it under 8, but you can contribute the 5,000 until they're 18. They can use it for college. They can use it for first-time home buyer. They can use it for acquiring a business, which is an interesting one. We'll see how that all works out in 10 years' time. But it's basically a supercharged 529 plan, essentially, which is the college savings framework. It's 549 pages, so there's a fair bit of stuff in there. But those are the highlights that stuck out at me as far as the tax provisions go. They're making a lot of the Tax Cut and Jobs Act things that were supposed to expire at the end of 10 years, they're making those permanent. So like the no personal exemptions, the change in itemized deductions, the change in the standard deduction, the change in casualty losses, all this kind of stuff is basically just being entrenched as the new permanent way until we get another tax bill in another 10 years. Because it's about every 10 years we get a new major tax bill, just historically. There was a 76, there was an 86. Can't remember the one in the 90s, but there was 2004, and then we got 2017. It's a pretty regular thing that the tax law gets completely changed.